Good evening. Thank you for staying this evening with us. We're talking about Mercado Libre. Basically, the company reported 1.3 billion revenues in Q4 with an impressive 150% growth and exceeded the market consensus. Clearly, they missed on the earning per share because the market was expecting teeny earning per share, and they reported a loss of $1.02 per share loss. So, which is basically in line with the loss incurred in Q4 2019. So, what is important to highlight here is that we feel pretty much enthusiastic about MELI Q4 results because this was not the time of delivering a positive earning per share. It was the time to continue growing or even accelerating the pace of growth. And that's exactly what MELI's management has done. They have committed more capital, they committed resources to continue growing because COVID has been a great opportunity for all e-commerce companies because it worked like a flywheel, which has accelerated growth. And in such an environment, it was absolutely right to continue investing and deploy their strategy. If we go deeper into the single division, so let's see what we have learned from these results, this set of results, and what we have been reassured about. So as far as Mercado Pago is concerned, basically the company is adding new use cases which are working quite well, such as public transports and highway tolls in Buenos Aires area and in the city where the company operates. So the number of transactions per user in the quarter increased to 14 from 8 in Q4 2019, and that's an extremely encouraging sign for Mercado Pago. Overall, the installed base of Mercado Pago is growing faster than the installed base of Mercado Libre, and that's another very encouraging sign, especially in Argentina. So now the app downloads is equally matched, so it's 1 to 1. While 1 year ago it was basically 20 to 1, and that's a very important sign. Another element we believe might be a major driver of growth for the future is Mercado Pago entering the remittance business, allowing basically remittances from the US into Mexico. For the time being, it's still a negligible contribution. It's just a startup, but here there's a huge potential market. So we expect it will further fuel growth. As long as Mercado Libre platform is concerned, basically what we have seen here in Q4 is that the company is combining logistic capabilities and the share of wallet to allow the platform to continue being an important player in the consumer product arena. MELI is still investing aggressively building the logistic network, although it's still far from reaching an optimal cost structure. That's why we have said that it's not important they incur the loss, because basically the loss was due to their aggressive investment in building such a logistic network. But in the long term, thanks to this network, MELI should improve operating margin as basically it scales up and gets more efficient in predicting volumes, in managing capacity utilization, and in getting more ability to close price gap for some key product, especially in consumer electronics, which is, let's say, an important part of MELI marketplace. If we look at specific market, we have seen that Mexico, which has been an important part of the MELI growth story in the past, is continue doing extremely well. Now we can rely on a sequential growth of for multiple quarters. Chile is the fastest growing market right now, and Colombia is the second one. So these are two new areas where MELI is setting up its operation. So things are expected to further improve in these two countries once MELI continue deploying a platform, set the logistics, and relies on it directly managed centers. And again, here, clearly, we see the clear reason why MELI incurred a loss in Q4. That's because they are deploying their strategy. They are accelerating the penetration of specific market like Chile and Colombia, which might be two important component of MELI expected revenue growth in LATAM. As far as Mercado Crédito is concerned, it's a pretty much similar story as for the other divisions. MELI here is increasing the credit origination for two main reasons. Number one they are getting more confident on its, let's say, proprietary scoring model and the collection tools they can rely on. So MELI is offering credit not only on Mercado Libre marketplace, but also on Mercado Pago, with more than 4.2 million to be more precise, who were granted credit during the quarter, which is an impressive figure. They basically allow users to pay a utility bill, rely on a small loan, or they offer a loan to clients. These drives users to the marketplace, which is the ultimate goal of Mercado Libre. Today, Mercado Libre keeps 70% of loans value on its balance sheet. Going forward, the percent should be reduced to 50%, and this will allow to offload part of the loans value and to reduce funding need. I mean, they're still in the testing phase, but they are expected to launch a credit card in Brazil and also selling insurance contract on its platform, which is again a way to gain new customers. So after, let's say, this brief outlook on the divisions, let's look at the valuation, what we believe Mercado Libre should be worth or could be worth. As usual, our valuation approach is committed to see what percentage of growth is already factored into current share price. So we have checked consensus until 2023. After 2023, it's less reliable. And we see that consensus is still very low on future growth. This is one of the main approach that financial analysts use. They are always very cautious because they try to adjust figures in due time. So there's no need to anticipate a faster than expected growth. We believe there is such a need because it makes sense to spend a buy recommendation as long as you are proactive and as long as you can see farther than consensus. So we believe this is our capacity. So now the main idea under our valuation approach is that consensus is short in terms of growth. So the company will deliver a higher than expected growth. And Q4 is the confirmation that such growth is well backed by the investment the company has done in the Q4. We believe growth will be in the region of 30-35% compound annual growth rate over the next 10 years. Probably might be even a bit more. And the main catalyst is the penetration of e-commerce in the area, which is around 5%. We remind that US is around 30% and China is around 20%. So there is still an under penetration of e-commerce. And Mercado Libre is committed to increase such penetration by also allowing clients to rely on Mercado Pago. So the possibility to get a credit is works like a major catalyst for the penetration of e-commerce in the area. And this leads also to social benefit, but that's another part of the story which we're not touching today. Still on the valuation side, the other key factor is the free cash flow they are able to generate. So normally the free cash flow is a percentage of the EBITDA, while in this case, there's a peculiarity. So MELI free cash flow is higher than EBITDA. And there's one of the reasons why this happens is that there are non-cash expenses and non-operational income in its cash flow statement, which under US GAAP, they are not consolidated into the EBITDA. So this is a peculiarity. We believe the capacity to transform revenue into free cash flow is around 20%. We have used 22, might be even a bit higher going forward, but for the time being, we are confident with our 22%. We are assuming a discount rate around 11% because we also take into consideration a 2% risk premium due to exchange rate risk. So we have seen in Q4 that there was an impact especially due to Argentinian peso transformation into US dollar. It was around 9 million specifically for the Argentinian peso. And we have to take into consideration this risk going forward, although the company is addressing the issue. So entering into fixed neutral negotiation in most of its contracts. So we use also a perpetual growth rate at 3.5%, which is even conservative the e-commerce perspective in LATAM and the penetration we have talked about before. And based on this assumption, we have an equity value in the region of 138 billion, which delivers $2,767 per share with an upside potential in the region of 63%. Clearly here, we relied on more sensitivities. We have made different sensitivities on our key value drivers drivers, which are compound annual growth in revenues, conversion of revenues to free cash flow, discount rate, and perpetual growth rate. And if we look at our three sensitivity tables, we get basically a valuation range by using different discount rates, different perpetual growth rate, different revenue to free cash flow conversion. We get a valuation range in the region of $2,400 and $3,200 per share. So there's still an upside. Clearly, there is a risk behind our investment case, and the bulk of risk relies on the management execution. So the investment case is based on the manager's ability to scale up the business as fast as possible. And those 30% growth rate should be supported over a number of years to deliver such valuation. We don't see any other big risk. Probably MELI is not cash burning at the moment. There are significant capex going forward, but MELI can rely on its capacity to rise debt. So the share capital dilution should not be a major concern. Overall, to conclude, the key point we have to fix here is that after Q4, the catalysts remain all in place. The buy equity story remains unchanged. E-commerce in penetration remains low, and this is a guarantee of further growth for many years ahead. So don't get focused on market expectation and consensus, because they are short-term, I would rather say short-sighted, and they miss the growth potential going forward because of the attitude of adjusting numbers after the report. If the management in Q4 were committed to EPS, it would have missed the golden opportunity to fuel growth in a timing where it was a great opportunity to continue invest. So this is what they have done. They have invested in logistics software. They have invested in logistics on the territory with last mile presence. They have invested in credit loans. They have invested in new opportunities like remittance and insurance. So we are pretty happy about that. So this is a long-term story. We expect they will continue delivering value over the long term, and we will be happy shareholders. That's all for the time being. We are available for any question you may have, and don't forget to leave a like. Thank you.